Hello, my fellow silver and gold stackers. Welcome back to Gold Rush Reporter, where we dive deep into the metals markets so you don't have to guess what's happening. Today, we've got an exciting topic. Silver is on the brink of $100 an ounce, and we're talking about why this could happen imminently and what it means for all of us in the stacking community. Right now, silver is trading around $94, and gold is at a record $4,700. Both are hitting new highs, and silver is just about $1 off its all-time peak. If you've been watching the markets, you know we're not just talking small moves here. These are significant price points that have major psychological implications. Hitting $100 is a milestone, and if it breaks through, some analysts, including our friends in the industry, believe $150 could be reached within weeks. That's how explosive the momentum is right now. If you're new to precious metals and wondering why silver and gold are climbing, it's a mix of global economics, geopolitics, and market psychology. The ongoing war in Ukraine, unrest in Iran, uncertainty around US-European relations, and President Trump's Greenland ambitions are all factors shaking investor confidence. On top of that, Federal Reserve leadership changes, inflation concerns, and waning trust in the dollar are adding fuel to the fire. This frenzy is drawing in new investors who normally wouldn't consider precious metals. Local coin shops and bullion dealers are seeing a surge in first-time buyers, which strains supply and drives prices higher. Some of the largest bullion dealers in the US have even instituted a $500 minimum order, because they simply cannot handle the volume of smaller purchases. But smaller shops, like ours and others across the country, still welcome buyers who want to start stacking with just a single silver dime. Speaking of which, a silver dime today costs about $6.70, far from the $1 it was priced at over a decade ago. The demand is relentless. Physical silver is moving fast. Even premium coins, like proof eagles, are seeing prices rise, though local coin shops can often beat the US Mint's pricing. The Mint has recently repriced proof eagles to over $170 each, reflecting their anticipation of continued silver gains. Local dealers, meanwhile, provide access to both bullion and proof coins without those steep premiums, making them a better choice for many investors. One interesting development is the refiner situation. Many refiners are refusing to buy alloyed silver, focusing only on higher purity bars and rounds. This includes the popular 90% and sterling silver products. Even when refiners are willing to buy, payouts can be delayed from 7 days to as long as 3 months, which creates cash flow challenges for coin shops that rely on fast turnover. This is a key factor in why some local dealers are encouraging smaller, more flexible purchases, keeping the silver moving while demand is surging. And let's not forget about taxes. Washington State recently implemented a 10% tax on bullion, driving buyers south to neighboring states like Oregon, where no sales tax applies. People are making long drives, even several hours, just to avoid the tax and get more metal for their money. This kind of demand pressure is pushing prices even higher, highlighting how local policies can directly influence silver buying trends. So, what's next? Silver is approaching that $100 barrier, and every piece of news, from geopolitical tensions to local bullion policies, could push it past that milestone. In this video series, we'll explore what that means for investors, how to navigate the premiums on coins like silver eagles and proof sets, and why the market is so hungry for physical silver right now. Now, let's dig deeper into the silver market and the premiums we're seeing right now, because this is where the story gets interesting for both new and experienced stackers. While spot silver is climbing toward $100, the premiums on physical products, especially US Mint coins, are shifting in real time. For example, the proof silver eagles, which used to sell for mid-90s, have recently been repriced to over $170 each. That's not a random number. It's the mint projecting that silver prices will continue to rise, and they're getting ahead of the game. Local coin shops, like the one we work with, offer a different perspective. They often sell the same proof coins for a much lower premium than the US Mint. Why? Because they're not constrained by subscription systems or national marketing campaigns. They can pass along the savings directly to customers. For stackers, that means you can get proof eagles closer to the actual silver value rather than paying extra for packaging and mint hype. It's important to note the difference between proof coins and bullion. Proof coins are struck with polished dies, giving them a mirror-like finish and often placing them in protective packaging. Bullion coins, on the other hand, are primarily valued for their silver content. Today, a bullion American silver eagle might cost around $101, while a proof eagle from a local shop could be roughly the same price, despite the mint charging $173 for the same product. That's a huge advantage for those who know where to buy. This also ties into supply dynamics. Refiner behavior is creating artificial scarcity in certain silver categories. Many refiners are currently refusing to buy lower purity or alloyed silver, focusing instead on 3/9 or higher purity bars and rounds. That means products like 90% junk silver or sterling silver are harder to sell back to refiners, creating bottlenecks. Dealers who want to maintain cash flow can't tie up capital for months waiting on payouts, so local shops are encouraging purchases and keeping inventory moving as efficiently as possible. Meanwhile, demand is surging on multiple fronts. Washington State's 10% tax on bullion has pushed buyers to Oregon and other neighboring states, increasing traffic at local coin shops. People are driving hours just to avoid paying extra taxes, and they're bringing cash, often in significant amounts, to buy silver directly. This isn't just a minor trend. It's a major factor affecting both local supply and national pricing dynamics. The increased foot traffic and cash purchases are creating a near-perfect storm for silver prices to continue climbing. Another key point is the psychological barrier of $100 silver. Investors and stackers alike see this as a major milestone. Once silver breaks this barrier, the next target could be $150 within weeks, based on historical momentum and current market frenzy. This is amplified by geopolitical tensions, the war in Ukraine, unrest in Iran, and other global uncertainties, plus financial volatility in the US and Europe. Every headline adds fuel to silver's fire, pushing demand higher. Additionally, premiums are behaving differently than in previous bull runs. Historically, premiums on silver products were much higher compared to spot price. Now, even with silver approaching $100, some premiums are only 2 to 3%, which is unusually low for silver. This is partly due to high volume sales, partly due to mints and local shops projecting future price increases, and partly because buyers are now more focused on acquiring silver for the long term rather than short-term speculative gains. Finally, we have to consider the impact on smaller investors. Local shops, unlike national dealers, can accommodate smaller purchases, even a single silver dime for $6.70. These small transactions are crucial. They keep newcomers engaged, expand the stacking community, and put additional upward pressure on silver prices as more people participate in the market. The surge in both demand and premiums signals that silver is entering a new phase, where scarcity, geopolitical risk, and investor psychology all converge to drive momentum higher. Now that we've covered premiums and local supply dynamics, let's talk about the global factors driving silver and gold higher. This is where things get really interesting for anyone trying to understand why prices aren't just rising, they're accelerating. The mix of geopolitics, central bank uncertainty, and investor psychology is creating the perfect storm. First, let's address geopolitical tensions. The war in Ukraine continues to weigh heavily on global markets. Any escalation in conflict sends investors towards safe haven assets like gold and silver. Similarly, unrest in Iran is contributing to market unease. There are reports of an aircraft carrier group heading to Iranian waters, and even the possibility of military action can instantly push silver toward $100 or beyond. These aren't minor headlines. They directly affect market behavior because investors react to perceived risk, and precious metals are the first place many turn during instability. Then there's the Federal Reserve. Even though the economy is technically improving according to some numbers, public sentiment tells a different story. People aren't feeling it in their day-to-day lives, and that lack of confidence in the economy reduces trust in the dollar. When faith in fiat currency declines, demand for tangible assets like silver and gold rises. Add to that Fed leadership turmoil and potential interest rate uncertainty, and you get a strong tailwind for precious metals. Supply-side pressures also matter. As we discussed earlier, refiners are selective, refusing lower purity silver and prioritizing high purity bars and rounds. The limited ability to sell certain coins or bars creates artificial scarcity, which only intensifies demand from buyers. On top of that, Washington State's 10% tax on bullion is driving investors to neighboring states, swelling local markets and creating extra upward pressure on silver prices. Physical silver is literally moving, and that mobility translates into stronger pricing momentum. Now, let's combine that with the psychology of milestones. $100 silver isn't just a number. It's a psychological barrier. Traders, collectors, and new investors all recognize it as a tipping point. When we break through $100, historical patterns suggest that $150 could follow within weeks. That's because momentum in the precious metals market tends to compound. Buyers see rising prices and feel urgency. Sellers may hold, expecting even higher prices. This self-reinforcing loop is what can create dramatic, rapid moves in the market. We also have to factor in the US Mint. By repricing proof silver eagles to $170, they're signaling that they expect silver to continue climbing. These aren't arbitrary increases. They're based on research, projections, and market trends. Local coin shops benefit from this indirectly, as increased awareness of the mint's pricing encourages people to purchase locally at lower premiums before prices climb further. And don't forget the influx of new buyers. Many of these are first-time stackers entering the market because of fear of missing out. They may not understand all the technical aspects, but they see the trend, they see headlines, and they act. The combination of seasoned investors, new stackers, geopolitical tension, and supply scarcity is creating a perfect environment for silver's rally. Lastly, consider gold. It's hitting all-time highs at $4,700 and climbing. Historically, silver follows gold in these bullish periods, and the ratio between gold and silver often compresses when momentum is strong. That means, as gold rises, silver tends to accelerate even faster, especially when retail and investor demand is spiking simultaneously. In summary, silver's path to $100 isn't just speculation. It's a convergence of physical supply scarcity, geopolitical uncertainty, monetary policy concerns, and mass investor psychology. When all of these factors align, the market can move quickly, and this is exactly what we're seeing in real time. Now let's dive into what's happening on the ground, at local coin shops and bullion dealers, which is just as important as the macro factors driving silver higher. This is where theory meets reality, and where a lot of opportunities exist for investors and collectors. The first thing to note is demand. We are seeing unprecedented demand for silver. People who would never normally buy precious metals are now walking into shops, sometimes driving hours from other states just to avoid extra taxes or take advantage of better pricing. For example, Washington State recently imposed a 10% tax on bullion. This single policy has created a migration effect. Buyers are coming to Oregon, Idaho, or other nearby states to purchase silver without paying extra. Local coin shops are seeing traffic and volume surge because of this, which adds a real-world upward pressure on prices. Next, let's talk about premiums and pricing at the shop level. Proof silver eagles, which are highly collectible, have traditionally carried high premiums, sometimes 2 to 3 times the spot price of silver. That's because the US Mint is strategic. They know these products are in demand and can charge accordingly. Right now, the current year proof eagles are priced at around $170, well above spot, but local shops can offer similar proof eagles for significantly less. For new stackers, this is an opportunity to access collectible silver without paying mint-level premiums, which is something a lot of people overlook. Meanwhile, generic silver and bullion coins are moving fast too. At the shop level, it's not uncommon to see $97 to $101 for standard silver eagles, which is a very low premium compared to historical averages. Back when silver was $20 to $25 an ounce, premiums on coins could reach 20% or more. Today, even with prices nearly hitting $100, premiums are sometimes just 3 to 5%. That's an incredibly tight spread and makes it attractive to buyers who are looking to secure physical metal quickly. Refiners are also creating supply constraints. Many major refiners are refusing to buy 90% or sterling silver coins right now, and some only accept high-purity 3/9 silver bars. Payment terms have been stretched to 7 to 10 days, or even up to 3 months, depending on the dealer, which can create cash flow challenges for coin shops. This means shops have to manage inventory carefully. They're buying aggressively, but the turnaround isn't as fast as usual. In turn, buyers see limited availability, which adds another layer of upward pressure on the market. Physical scarcity is compounded by investor psychology. When people see silver approaching $100, fear of missing out kicks in. Buyers are no longer just stacking for long-term growth. They're acting in real time to secure assets before prices break new milestones. The combination of physical scarcity, delayed refiner payouts, and rising premiums creates a situation where local demand and global macro forces are aligned. Another factor driving local shop dynamics is the continued popularity of smaller purchases. While large institutional orders move tons of metal, local shops benefit from smaller, steady sales of dimes, rounds, and 1-ounce coins. Even small volume buyers contribute to liquidity and price momentum. For example, silver dimes at $6.70 each may seem small individually, but collectively, these sales keep cash flowing, and they signal sustained retail demand. Finally, it's important to understand how proof versus bullion coins fit into this ecosystem. Proof coins are highly collectible, often shiny with mirror-like surfaces, and are generally purchased for long-term investment or collection purposes. Bullion coins, on the other hand, are bought primarily for the metal content. The proof versus bullion dynamic can impact premiums, supply, and demand differently. With proof coins, the US Mint's pricing is intentionally high, signaling expected upward momentum. Bullion coins, especially in low-premium environments, allow regular investors to enter the market quickly, feeding into overall upward price pressure. In short, the local market is reflecting the macro forces: high demand, limited supply, selective refiners, low premiums on bullion, and strategic mint pricing. These combined factors make this a unique moment for anyone looking to invest in physical silver or gold. We are now at the moment everyone's been waiting for: the big picture outlook and what happens once silver crosses $100. This is where the psychological barrier comes into play. Breaking $100 isn't just another number, it's a statement. Once it happens, momentum can accelerate rapidly. Historically, these psychological milestones act like catalysts. Investors who have been waiting on the sidelines may suddenly jump in, and the media will start covering it, creating a feedback loop that can push prices even higher. In this environment, $150 silver within weeks isn't impossible. It's plausible given current demand, geopolitical tensions, and limited supply. Silver's rise is driven not just by fundamentals, but by sentiment. When gold hits record highs and silver lags slightly, retail buyers interpret it as an opportunity. They feel urgency, and that urgency itself drives price discovery. Right now, gold is hovering near $4,700 and silver at $94, $95. Even a few dollars movement feels significant because people are watching every tick. That attention is magnified when geopolitical factors are in play. The ongoing conflict in Ukraine, tensions in Iran, US foreign policy moves like Greenland, and global economic uncertainty all feed into the demand for safe haven assets. The physical market is just as telling. Local coin shops are overflowing with buyers, and inventory is moving fast. Even proof coins, which carry higher premiums, are being snatched up because collectors understand their scarcity and long-term value. Bullion coins and rounds, on the other hand, are selling quickly at low premiums, creating an opportunity for new investors to enter the market without paying excessive markups. Supply constraints at refiners amplify this effect. They're turning away lower purity silver and extending payout times, meaning shops must hold more inventory longer, increasing scarcity. Premiums are particularly interesting right now. Even with silver near $100, premiums on bullion coins are relatively low compared to past cycles. Back when silver was $20, $25 per ounce, premiums could be 20% or more. Today, the spread is closer to 3 to 5%. That's a remarkable opportunity for anyone looking to acquire metal before prices move significantly higher. At the same time, the US Mint's pricing on proof eagles signals that professionals anticipate higher prices. They're getting ahead of the market rather than chasing it, which is a strong indicator that the upward trend could continue. We also need to acknowledge the human factor. The frenzy itself becomes a self-fulfilling prophecy. When buyers see others taking action, they act faster, accelerating upward momentum. The combination of macroeconomic uncertainty, geopolitical tensions, rising premiums, and supply limitations creates a perfect storm. Investors should be aware that these moves can be volatile. Dips will happen, even during a bull run, but they are opportunities for those prepared to act. Looking forward, there are multiple potential catalysts for rapid price movement. Military deployments, escalating tensions in volatile regions, or sudden policy announcements from central banks can trigger spikes. Silver and gold aren't just commodities. They're instruments of wealth preservation and safe haven demand. That makes them extremely sensitive to sudden changes in global stability. For example, even the deployment of an aircraft carrier group near conflict zones can have immediate price implications. Finally, what does this mean for you as an investor or collector? It's crucial to understand both the fundamentals and the psychology. Know your entry points, consider premiums, and be mindful of supply limitations at refiners and shops. Physical metal moves differently than paper markets. Ownership and access matter. Buying now, even in small amounts like silver dimes or 1-ounce coins, allows participation in the market before psychological barriers are broken and momentum accelerates. To wrap up, silver is not just rising. It's surging under multiple forces: geopolitics, scarcity, retail frenzy, and strategic mint and dealer behavior. Crossing $100 will mark a critical milestone, and the next phases could be rapid and dramatic. Stay informed, stay alert, and be ready to act when the opportunities arise.